back. Yesterday, the Nifty fell almost 200 points and the Sensex was down over 500 points. The street was spooked by DHFL and the crisis there. A lot of banks were under pressure. So let's find out what you should be doing now. Sanjiv Bhasin of IIFL joins in. Sanjiv, hi. Good morning. Do you see a contagion impact because of the DHFL crisis? And which are the stocks that you would stay away from or even buy perhaps on a dip?
Yeah, good morning. So Sonia, no, I don't see any contagion effect, and I think that RBI was very prudent. I mean, everyone was looking that RBI is going to announce some measures on DHFL or bring up the topic of NBFCs, but they've alluded to that, and rightly so. They are in a very accommodative stance. You are at yields which are at 2010 low, and they want the market to sort out its own problems in the sense these over leverages are where assets have to be sold. The environment for asset sale is the best you've seen. In fact, continuity of government reforms and the likelihood of a wonderful budget is just around the corner. The contagion would have been more primary if you had seen more of this, because consumption is at a low key. So I think DHFL will tide over this. I think they are in the process of selling a large part of their assets. There are a lot of private equity deals which could go through in the next 24 to 72 hours. And I think we'll take it from there. What it leaves us is that the government has a huge armory of reforms on the side of liquidity, bonds and other caveats which can instill a lot of growth. Now, of course, the mutual fund exposure on the debt market is telling you that there are no free lunches, and you have to be very prudent where you thought risk-free returns are part of the parcel. That is over. We think yields are going to ease further, and in fact by March 2020, I think the repo could be even closer to 5%, which means that the days of fixed income returns of 8% are well and truly over. And I think the best way to play investments is now the SIP. Okay. So the SIP on equities will gather more momentum. And we think that this passing storm is an opportunity to buy. Okay, so we are sticking our neck out on 3 of the large corporate banks.
Oh, sure. Please go ahead.
That would be ICICI, Axis and State Bank. We think there is no cause for concern. In fact, they are garnering more market share and increasing their presence on the retail side. And our favorite mid-cap stocks are continue to be DCB, Federal Bank and IDFC First. Now, IDFC First is giving you an opportunity. There is almost 32,000 crore of bonds at 9%. Vaidyanathan is transforming the bank from a MSME to a retail side, and his CASA and NIMs are rising. Sure. The 9% yields will now be replaced by 7% bonds and so on.
Sanjiv, good morning. Got that point. But I wanted your thoughts on the bigger ones. Of course, you spoke about your favorite, but the ones which got impacted yesterday, IndusInd Bank, Yes Bank and Indiabulls Housing. How would you approach these 3 names in particular?
Well, IndusInd definitely is a part of that problem, but also it is also privy to being one of the largest CV lenders, and we know that CVs have been under the cloud. But I think most of their provisioning seems to be through, and if you heard what the State Bank chairman said, he said we've already accounted for a large part of DHFL. So there can be a little bit of more plateauing because of the rhetoric on the news. I think major part of the damage may be already priced in. On Yes Bank, it's a glass half full. They are in the process of raising funds. Until they don't raise funds, this stock is going to be under pressure. The third stock which you named was, I didn't get that.
Indiabulls Housing.
Indiabulls Housing, and you've seen that the management is very proactive. They want to allay the concerns on any of the over leverage. They've sold their real estate arm. So, Anuj, there are a lot of assets which were up for sale in the last 18 months. Now those deals will fructify, whether it's a Z, whether it's DHFL. And yes, errant companies are going to be brought to the books, and rightly so. So I think the contagion is not there. It may be cyclical, if you may say so. And we think that once you're past this June quarter, you should be up and about with much more prudence on the lending side, with the book actually expanding.
Okay, well, Sanjiv, I just request you to stay on for a bit because we need to take this NBFC HFC theme forward. Ritika Dua of Elara Capital, who joins us on the phone line, will give us a sense of how to approach it. Ritika, hi, good morning. I don't think too many investors are interested in what happens with DHFL because, that story is well known. But what do you do as an investor in some of the well-owned and, the growth-oriented NBFC, say the Bajaj Finances of the world, etc. If there is a further dip, is this a good time to be buying? And what would your top picks be here?
So, good morning, Sonia. So I completely agree with you that the ones who are not interested in DHFL, but then there are other names which are investable in the NBFC space. So the likely names of Bajaj, while we don't have that under coverage, but then HDFC, Cholamandalam Finance. We think that these there are some marquee names which will continue to grow because there is demand for housing, there is demand for vehicles. It is momentarily not there because of, various factors, be it the macro, be the liquidity. But then eventually once the demand comes back, there are big and finances who've been there for long and doing sensible business. So they would come back, and I think they are investable bets if once the correction comes by.
Okay. By the way, on your screen is the next step, the mandatory open offer in the case of Reliance AMC being made by Nippon Life. Ritika, what we also saw yesterday was that, almost every NBFC was painted with the same brush because there was a lot of panic in the market. I specifically want to get your take on Edelweiss, if that is under your coverage. How would you look at the stock and some of the concerns that surround the credit business there as well?
So we don't have it under coverage.
Okay.
But then I think, given the fact that they were also, under a lot of stress post the, the ILFS crisis, and also they were painted by the same brush to some extent post the, in line with DHFL. So the DHFL concern, which erupted like the day before yesterday when they were downgraded, it's going to take some time for them to, realize their assets. Nonetheless, I believe they would be able to realize some of the assets which are on sale. And my understanding with credit rating agencies is that they might be upgraded from the D, might not be a BBB again, but then they might be at least upgraded soon. So if that is the case, then some respite would come, but then some of the other names which were painted along with DHFL would continue to see some pain in terms of raising money.
Okay, Ritika, we leave it at that. Thank you so much for joining us and giving us your quick take. So that's the word coming in from Elara Capital. But we have been in conversation with Sanjiv Bhasin. Sanjiv, the other big story that could fructify today is Indiabulls Real Estate looking to exit its realty business. We are expecting the deal announcement to come in a couple of hours from now. How would you move on that stock? It's had a very good run so far this year. It's a 50% year-to-date up move that the stock has had. What do you do post the deal?
Well, I think it's the making of a very good deal, and I think real estate assets, Sonia, in the next 2 years can actually be the best assets to be in, because once you have the wealth effect of 12,000 spreading over to the broader market in the next 6 months, you will see fixed assets, particularly reality, which has been in a slumber for the last 5 years, coming back with a very, very strong vengeance. We think political stability, rupee, oil, bonds, and a lot of the consumption themes playing out. I think this is a very good deal which they've got, and obviously they're getting it at a price which is far lower than what the actual valuation is. I personally think land banks stocks selectively may do very, very well as they've reduced their debt, and return on equity may only go up in the next 2 years.
Okay, fair enough. Sanjiv, let's discuss some other topics as well. Yesterday's top loser actually was GAIL. Your thoughts on the stock, and are you buying it on this decline?
Yeah, so as a disclosure, we are of the view that you should add it on these prices. We think the PNGRB ruling the price hike may be lower, but we think definitely you'll see room for another price hike going forward. Now, this has been a bone of contention for some time, but I think 4.5% still will give you a 10% CAGR for the company over the next 2 years, provided crude remains here. We think utilities are in the best space. So, as a disclosure, IGL, MGL have been two of our top picks, and they've performed very well. We still think there is much more room on the upside. As a disclosure, we would recommend buying here, GAIL here at these 315, 320 levels, given that it's the third bonus in 5 issues and they are able to service an enlarged capital. So, notwithstanding this one-off, I would say this is an opportunity to buy.
Okay, that's a thumbs up on GAIL after yesterday's major sell down. Sanjiv, good morning. Now, on cement, there is a little bit of a rumble in the market because one has been hearing, Nigel's been telling us that apparently in AP and Telangana, there are some price cuts that are coming in. We're anyway getting into the monsoon patch. These stocks have had a good rally. Are they vulnerable to a profit booking spell, or should you still keep the faith? Should you still buy cement?
Yeah, so look, Surbhi, if you want to play the India theme for the next 18 months, it's the 4 C's. And it starts with cement, second is construction, third is corporate banks, and 4 is capex. These are all India-centric models where cost of money falling can only mean more deployment on the infrastructure stroke, roads, inland transport, and rural housing. Cement has been one of the best performing assets in the shape. Ultratech came out with stellar numbers about a quarter back. And the regions you pointed out, there has been a change of regime. There could be some issues regarding, reduction of cement on the face of it. But I think the cartel is far too strong. I would expect once the monsoon are through, you would again see price rises and volumes at record highs. As a disclosure, cement has been one of our top sectoral picks. Ultratech, ACC, JK Lakshmi Cement, and Shree Cement. These are 4 stocks where we recommend buying on declines.
Okay, we have been chatting at length, Sanjiv, about the moves in the auto space. We're only getting cautious commentary from all managements, whether it's the tractor industry, the UV space, or even passenger vehicles. At what point do these stocks start becoming buying opportunities, or are they already?
Well, they are already, according to us. We've been contrarian. We think that yesterday's price cut or the rate cut is definitely going to see a follow-through effect, and the best place to be is in two-wheelers and passenger cars. Now, Maruti has seen the worst of numbers, which I think are a 6-7 year low, and it's the best opportunity you have to get in the largest passenger vehicle maker. We know the transition and the effect of electric vehicles, secondly from diesel to fuel, will be transitionary. But I think selectively you will be making a lot of money if you can weather the one more quarter. So for us, our top pick has been Ashok Leyland. Sonia, it mirrors the growth which the aspiration of the government is 200 airports and a large part of the defense armored truck deals. Their transition into being, they are the 3rd largest bus maker in the world and 50% bus maker in India. With electric vehicles now being the cornerstone in the next 3 years, Ashok Leyland can never have it better. The price is giving you an opportunity to enter. Eicher Motor would be another brand where we think at 20,000 most bad news is in, and now given the rate cut, it should only instill a lot of momentum on the lending side, given that customers have been waiting for better days on the political front as well as on something on the rate side. So Eicher, Ashok Leyland, Bajaj Auto and Hero Motocorp and TVS Motors, these would be preferred pick. And if you can weather the rhetoric, then Maruti at 6,800 becomes a very good buy.
Okay, the titan of this market quite literally has been Titan, Sanjeev. The kind of gains that we have seen, is it now turning into a bit of a bubble, or you think it's still a buy at these levels?
No, I think, Anuj, the big are only getting bigger now. Of course, the glass is half full, half empty. Whether I should chase Lever or a Titan, which are making new highs but trade at very high valuation. You can include another of my top picks, which is Nestle, where I'm very, very overweight. But, stay with the leaders. Try and add 50% of the mid caps into your portfolio on a gradual basis, because I think in the next 18 months, mid caps will give you a true run for the money. But Titan, UPL, Coal India, Hero Motocorp, these have been star outperformers and they continue to be. We think a lot of the PSUs are undervalued and there can be a lot of value creation in the next 6 to 18 months. But Titan again definitely can see at least a 10% upside in the next 4 to 6 months.
Okay. All right, Sanjeev, we'll leave it on that note for this morning. Thank you very much for joining us with your ideas and thoughts. That's a view on the fundamentals. The SGX Nifty, by the way, is still down about 22 points. We're getting truncated cues from Asia. Chinese markets aren't trading today. Nikkei, Kospi, for whatever it's worth, is positive. But the SGX Nifty, as you can see, is still struggling at the lows of the morning. Let's take that break. We will come back on the other side and get you the pre-opening rates as well. We'll also have Mr. S. Tulsian joining in with more fundamental thoughts.